This presentation is brought to you by nonprofitaccountingbasics.org, an educational project of the Greater Washington Society of CPAs Educational Foundation.
Hi, I'm Elizabeth Bess Hamilton Foley, and today we're going to talk about nonprofit operating reserves, creating a policy. So the first question we would want to ask is, why would we do this? So let's make a case for building an operating reserve. First of all, an operating reserve really supports fulfillment of mission and fosters strategic decisions. After all, nonprofit does not mean no surplus allowed. It's just a tax qualification. It promotes donor confidence. People love a winner, so they want to invest in an organization that is sustainable and that is going to be around for 5 years so that their investment in the organization really pays off and continues to pay off. An operating reserve provides financial flexibility. It prepares an organization to handle emergencies or seize opportunities or deal with other things that just come up. Having an operating reserve definitely improves cash management and reduces stress. It permits acceptance of reimbursable grants because, as we know, sometimes those grant payments don't come when we expect them. It also allows for bulk purchases at lower prices and to take opportunities to make smart decisions. It demonstrates proactive, prudent management and planning on the part of the board and staff of the organization. It's very hard to think strategically when you're worried about making next week's payroll. The operating reserve lives on the balance sheet or the statement of financial position. This is a picture of what a balance sheet looks like. You have your assets, which are what you have or what people owe to you, or what people are holding on your behalf, minus your liabilities, which is what you owe to other folks or holding on behalf of other folks. The operating reserve lives in the net assets section of the balance sheet. In particular, it lives in the unrestricted net assets section. Let's look a little deeper at that. The operating reserve is a component of unrestricted net assets. In order to understand what we can use to create an operating reserve, we have to distinguish between what's available and not available. What's not available is the non-liquid portion of your unrestricted net assets, that portion that you've invested in fixed assets such as equipment and property that is not readily available as cash. So what is left is available for the board to designate or to leave alone. So the board can leave an undesignated portion of the available net assets for day-to-day working capital. It can designate a part of those available unrestricted net assets to be the operating reserve. And it can also designate parts of the available unrestricted net assets as special purpose reserves, such as for a building maintenance and replacement fund if there's a facility involved, or for special initiatives for strategic planning. We're specifically interested today in board-designated operating reserves. So the first question we'll want to answer is, how much to designate? And of course, our answer is, it depends. The Nonprofit Operating Reserves Initiative Work Group suggested that 25%, or about 3 months of annual operating expenses on average, might be a good place to start. But it really depends on what the needs of the specific organization are. Each organization needs to decide what is adequate for its own purposes. I'm going to repeat this. There is no single correct solution or benchmark. One size does not fit all when it comes to setting the amount for the operating reserve. An organization has to examine a lot of different factors that play into the decision about what the reserve target should be. These involve revenue, spending, governance and management factors, programmatic risk, and in sometimes even the life cycle of the organization. Some management factors, for instance, might be how well does the organization budget? If the budget, especially for revenue, is accurate, you're more likely to need less of a cushion for those funds that aren't going to come in. Let's look at some revenue volatility factors. Sometimes an organization may have a list of stable funders that they can depend on, and that might indicate that the 25% or a lower amount of operating reserves as a target might be necessary. But if there is if the grants are unreliable, or the reimbursement grants are coming in late, or there's an uneven cash flow, that may indicate that a larger reserve might be more appropriate for the organization. If there is a dependence on one or two funders or a special single fundraising event, that could also indicate that a larger reserve might be appropriate. Regarding spending, the more flexibility that an organization has, the more control it has over adjusting its expenses, the lower the reserve amount might be. But in cases where an organization could be called upon at a time of crisis to provide a spike in services for which it would need resources, a larger reserve might be more appropriate. The ability to downsize operations or adjust staffing and levels would definitely mitigate the size of the reserve target that might be selected. Long-term leases, the balance of the dependence on a key person, all of these things come into play when deciding what level of reserve should be your target. So once a target has been selected and determined, then it's time to develop a policy for the reserve. So here are the suggested steps for developing an operating reserve policy. The first step is designed to get buy-in from the board of directors, because building the reserve is going to take a lot of energy and input from them in raising funds to fund the reserve. There is a copy of the white paper, Maintaining an Operating Reserve, and the brief introduction to Nonprofit Operating Reserves Initiative by Nori that you can use as background for making the case to your board of directors. When the board concurs, and it will charge the finance committee or a special task force to create an operating reserve policy draft. The committee members and the executive and finance staff can use the tools that are available on the website, specifically the Operating Reserve Policy Toolkit, to help determine what that ratio is going to be and to actually draft the policy document. After the draft policy is in place, it's presented to the board. The board discusses and either approves the policy or requests changes based on the discussion. Then the committee or task force finalizes the policy, the board finally approves it, and we begin implementation of the policy. Periodically after that, the policy will need to be reviewed and updated as necessary. So now we have our policy in place. Let's look at what we have a plan for developing the policy. Let's look at the components that the policy needs to include. First and foremost, although it may seem obvious, we would like to just state for history the purpose and philosophy of why this policy is being developed. Why is the board designating these funds, and what are the objectives? We can use items from the making the case as part of this portion of the policy. It may seem obvious to you what the details of the establishment of the fund are, but it's going to be helpful for future board members and staff leaders if we detail the mechanics of establishing the fund. So putting into the policy, when was it established? What was the opening balance? What did the board designate from existing net assets to begin the fund? What did they establish as the target amount or ratio? And what was the method that they used to calculate that? Did they use the 3-month average? Or did they disqualify some funds from the expenses that they used? Those kinds of details will come in handy for the future. Is the board going to require a separate bank account for the funds? Do they have a specific funding plan for how to reach the target amount? Is that incorporated into the annual budgeting process? All of these things it's good to have in writing and be very clear about. Defining terms within the policy may also be useful. For instance, folks may not understand what unrestricted means. Being clear about how the funds are to be used and replenished is also vital within the policy. Defining who may access the fund and what authorizations need to be given or are required by the Finance Committee or the full board. Deciding at what amount the managing director or executive director may have discretion to use the fund, and over which amount they have to get permission. What communication methods are acceptable? Is email okay? Do you require something signed in writing? What flexibility is there around that, and what's the turnaround time? How much can be withdrawn at any given time? How long can the funds remain out of the fund before they're replenished? Does collateral need to be required? In other words, is the board going to require that a looming receivable or a pending receivable be identified as replacing the funds that have been used? And how is the reserve going to be used relative to accessing funds from a commercial line of credit that the organization may have negotiated? By the way, I think it's a really great idea to have a line of credit in addition to an internal operating reserve in your toolkit for managing cash flow. So managing and monitoring the fund. The policy should spell out who's responsible for managing the fund. Usually it's the executive director or the CFO. What are the accounting procedures around it? And particularly, what are the reporting requirements? Will it spell out, for instance, that your balance sheet needs to show the due to and due from when the funds have been borrowed? And what is the disposition of any interest the funds might accrue if they're in a savings account, for instance? What are the liquidity requirements for the funds? And is there an investment policy specifically for the funds that define what level of risk can be involved in investing the funds? Finally, you'll want to define the role of the Finance Committee in monitoring and the activity of the funds, how often and in what manner they'll report to the board about the fund's activity, and how often will the reserve policy be reviewed and updated. An outline for the policy development is included in the Operating Reserves Toolkit on the website. Now the question of the hour: how might you go about funding your operating reserve? Here are some suggestions for how to fund the reserve. In a nutshell, surplus, surplus, surplus. Chronic deficits will not permit you to fund an operating reserve. So budget for operating reserves, operating surpluses annually. Include a contribution to the reserve as a budget line item in your operating budget. Fund non-cash depreciation expense, because when you bring in that cash and don't have to spend it, that liquidity is there for your board to designate. Include funding and operating reserve in your multi-year capital budgets. Include funding a reserve as a component of capital campaigns. Include funding the reserve as part of your planned giving strategy, designate board contributions, or designate staff vacancy savings, and designate windfalls. Don't spend that windfall. It can't be repeated next year. Put it toward your operating reserve. Some groups also take 10% or so of any unrestricted gift and put it toward the reserve. What ideas might you have for funding your operating reserve? All of these documents, the white paper, the policy toolkit with all of its appendices, and a new 3-page reserve intro that could be used to help make the case to your board and to your funders, are available at the Operating Reserve's website, which is too long for me to say, but the link is right here. Thank you so much to the United Way Worldwide and to Urban Institute for being our primary sponsors for the operating reserves.